Hi, it's Mo and welcome back to the property vlog. This week we're heading to Birmingham to meet the CEO of Crowdproperty. So I'm here with Mike Bristow, who is the CEO of Crowdproperty and one of the original founders as well. I was saying to Mike, I recorded a video back in February running through a bit of a Q&A on sort of what is Crowdproperty. We're a fairly regular borrower from Crowdproperty. We've done £6 million of borrowing across 5 projects, which have all been repaid in full and on time. So I did a bit of a video from that point of view as well. But I wanted to do an update because actually quite a lot's changed from Crowdproperty, even in the sort of 6-7 months that it's been. And as KHP, we've also we've repaid, I think it was £2.5 million since then, and we borrowed a further £2 million for a new project that we're doing as well. So loads of change. So thank you for taking the time to talk with me.
Pleasure, and thank you for visiting.
No, yeah, it's nice. It's great to see the new offices. Yeah. I was saying that it must have been more than 2 years ago that I came up to see you before, because you were in the old office. And it's great to see the expanded team in the new offices. So excited to take part. I'm going to be taking part in a borrower focus group later on, which is very, very exciting, and hopefully help Crowdproperty sort of structure the product and make it even better for borrowers in the future. So we're going to run through a few quick fire questions just to give the audience as much value as we can. So we'll start at the top. So in one sentence, can you tell us what is Crowdproperty?
Well, as I said, I could do this over 17 hours, but quite simply, property finance by property people. I think that is A, unique in the marketplace, B, really resonates with the developers that we work with, because we really understand what it takes to develop a project, to build out, right from the grassroots level. And you know, projects are not easy, as you know. Right? Stuff goes wrong. Stuff always goes wrong, and having real property people that have that as their core DNA, that have been on site and understand those challenges, gives us a better relationship and a better partnership with our borrowers. So
conversely, that means that the traditional lenders don't have a property background focus, would you say? Is that why?
Yeah, I think financial services as a whole is not famed for its customer centricity, right? And you know, we founded this business off the pain of borrowing in this market ourselves, funding our projects, right? And that was broken. And there's no better way to start a business than to have a pain that you face yourselves, that you really understand, right? Why is this a pain? Where are the problems? How can you solve it? And that was the genesis behind Crowdproperty. And there are a few nuances on that. So how we think about our service delivery is, for property developers, we deliver speed, ease, certainty, transparency and expertise of property and property finance, and that is exactly what makes the sort of that side easier for property developers. I mean, fundamentally, a property developer sort of splits its time into their time into 3: finding sites, delivering sites, and should we say faffing around with finance. Right? And if we can make that faffing around with finance a half of that time, a quarter of that time, people grow their businesses quicker because they can find more sites and execute more sites. And it's that fundamental sort of piece that really understands what developers want and need.
Amazing. So can you talk to us about the journey of Crowdproperty sort of from inception to date? So I mean, even like I was saying, loads has changed in the last few months, but obviously you guys have been running for a few years now, and it's changed massively. Can you talk to us about that journey?
So that pain, we thought we'd address it and set up Crowdproperty to address it in 2013. We then started lending at the end of 2014. And one of the important elements of our business is we leverage a lot of technology and data for efficiency of lending, and expertise for effectiveness of lending. And those two together are very powerful. Now, it takes time to build out your technology, and all of our technology is built in-house in this office just around the corner there, as you see. And we've got a lot of software engineers there working tirelessly, and it's always been in-house. built to our specifications with our requirements, with our priorities, collectively, not outsourced, not offshore, none of that. Okay, we built a better technology business as a result of that. So that was sort of the genesis. Put a lot of tech behind it, but ultimately, to work with property developers, you can't algorithm lending to property developers on property development projects, right? What we do is all the efficiency is driven by that, but we still have expert human brains and expert humans interacting and making decisions on property development backing. We've gone through, so we at first we grew steadily because we're building out that technology, and now we've got that scalable system and platform to really sort of grow from, and that's really showing in spades now. Our team is 52. We're a very well-resourced business because we do our lending properly, and we place high priority on building relationships with property developers and also our investor base. And we've now funded £350 million worth of property projects. We're recognised in the Deloitte Fast 50 report, which is the fastest 50 growing UK tech businesses. So we were number 41 in that, number 1 in the Midlands area. We were recognised in the FT 1000, which is the fastest growing businesses, not just tech businesses, in Europe, at number 132. So we're really motoring now.
And loads of awards. You were showing me the awards wall.
The awards wall, which was put together about a year and a half ago, that needs to double in size. So we just haven't got enough wall space for it. That's really important to us as well, because we're getting recognised across property, across investment, across startup, scale up, across tech, deployments, entrepreneurship, etc., etc. And then one of the other, there's probably 2 other main developments that you can only get to once you've built a really, really strong, robust, scalable business. Is number 1, we've launched in Australia. So a few months ago, we set up this. We've got a full service offering in Australia with a local team, which is exciting. And then also closed our biggest institutional funding round to date, which was a £300 million funding line from a major global asset manager, which goes on top of our other institutional funding lines to have a really strong, diverse mix of capital, which means that we can be a very reliable lender, for example, through COVID.
Amazing. And I suppose that leads into then the next 5 years. So what's the core focus for the next 5 years for Crowdproperty?
Scale. So first and foremost is absolute focus on what we do. We touched a bit on that earlier, and really focusing in on serving our property development customers best. That enables us to win the business we want to win, where we see great people doing great projects, backing them, unlocking more and more house building from small and medium-sized developers. We see a very, very, very clear path and strategy to be lending 400-500 million a year over the next few years. And my background is strategy consulting, and so what's very, very clear and clearly laid out is the path, the end goal of sort of or the 5-year goal, and then working very, very prioritised and focused towards that, and that's how we mobilise the entire team. As I say, 52 people now, and they are very clear on what we're trying to achieve, how we're going to do it, and really sort of knuckle down and focus with a great amount of passion as well.
Amazing. So you touched on them earlier, but could you just sell us the benefits of Crowdproperty from a borrower's point of view? So what are the key things that your competitive advantage and why borrowers would come to Crowdproperty?
So really, really understanding the project, understanding complexities, ability to understand the vision of what the developer is trying to create. And we're going to understand at the top level, in terms of deal structuring and asset acquisition, etc., right through to what is the right order of actually executing things on site. And it doesn't mean that we're defining that. It means that we're a value-adding partner through that process and can really support that process. Every time we have borrowers phoning us and say to ask us, well, I've got this problem, what do you think? Now, nobody ever phoned Lloyd's Bank and asked them
I was
that.
just about to say, I think it's changed for us certainly, it's changed the dynamic of, historically you might be scared to call your lender and ask certain questions because you think that might undermine your ability to actually deliver a scheme or how experienced you are. But it was certainly a breath of fresh air when we started working with Crowdproperty, and it was almost like having another consultant on board, albeit initially a free one that gives you loads of value because you while you're going through that deal analysis process, you can actually bounce ideas and get. And if there's any gaps in your due diligence, you'll let us know and we can plug them.
And that's really important. Well, firstly, it's hard to get hold of a human being in many financial institutions, let alone saying to them, hey, I've got this problem, what do you think? Well, A, I don't think you'd get much thought, and B, you might hear the rustle of security papers in the background. But genuinely, when those queries come in, and they do, stuff goes wrong on projects, right? All the time. Right? It's just how bad they are and how you then react to that and solve it. And it's, basically we can then say, don't worry, we've seen that 50 times, just think about it like this, or here's an example of how you can solve that, or similar. Or it's, yes, that's a major issue. We'll burn the site tomorrow. Let's crack it together, right? There's it's a different relationship. It's a different partnership. And that's the sort of the end-to-end project piece. The other piece is the upfront sort of deal assessment. Okay, we're a passionate bunch of property people that like looking at deals. Okay, and people can freely bounce projects off us. Okay, I don't mean send us a Rightmove link. I mean give it some thought, build out the cost model, pop it over to us. We'll be your second pair of eyes. Okay, because in a lot of cases, there are actually people moving, maybe they're property investors and they want to undertake more and more projects, etc. And the key thing is that it's a different dynamic. When you take on projects, you're committing yourself to 18 months of work, right? Make sure it's the right project in the first place, okay? And make sure you use your time best in terms of assessing it. So if you see something, you like it, okay, and you think it's good, drop it by us, right? And we'll give you an opinion on it. And, so we'll help you. Either we'll say, no, because we see these issues around it, or, that's grade 2 listed and therefore the cost model is way out, or whatever. It's just helpful feedback. And then you can say, great, okay, it doesn't stack. I'm not going to spend any more time on it. The alternative is, I've got this project, and we look at it and we say, great project. Relative to £7.5 billion worth of applications we've seen, this is a great project. Then you can confidently say, I'm going to forget everything else, and I'm going to focus on closing that deal, right? And those two answers are powerful, okay, and that helps you maximize your time.
Yeah, amazing. And I think certainly from our point of view, we've definitely experienced that, and that's the reason that we've got our six projects now that we've done or are currently doing, and we've got another one coming forward, and we can definitely vouch for all those things that you mentioned. And then for someone that hasn't borrowed from Crowdproperty before, can you give us just a sort of 2-minute overview of the process of how they can start to come and initially get the sort of feedback on their deal all the way through to actually drawing down the money?
Sure. So we've got an online application form that's 12 boxes. It takes 5 minutes to fill out. Okay. Why wouldn't you bounce the project off us if it takes that little time? Okay, we'll do the heavy lifting. Now, the great thing is that fires off a load of our data analytics, and then we look at it with eyes and expertise, okay, to give you a view on that and to how we can help if we think it's a good project. So engage on that, crowdproperty.com/apply. Now, whilst you're on that form, once you've submitted it, you may not have seen this, but we'll then return a load of local service providers that have worked on projects of similar size to yours. So if you don't know the architect that's done 10 projects locally to you that in your size band, might be worth a chat. And then also we'll present to you other planning permissions that are around the local area, so you can get a gauge of the relative supply and demand dynamics, especially of new stock coming in. So that's how to apply. Then we'll do that thing that's weird in financial services, where we'll phone you up and speak to you, and sort of understand, hey, look, what are you trying to do here? They're the numbers. Tell me the vision, right? And so we'll illustrate how we can help, and then once we're in agreement at the high level, we'll pass it on to a dedicated case manager, and that case manager will be with you from the due diligence phase right through to the end of the project. Okay, so and I've heard developers call some of our case managers, friends within Crowdproperty. Now, rarely do underwriters get called friends, but it's kind of the nature of the relationship we look to build with borrowers. So single point of contact. You'll probably have their mobile number. You'll certainly have their direct contact details, and at any point they may escalate things into the management around the property team, the underwriting team, etc., right up to Andrew, our property director, who's, as you know, a wealth of knowledge. And then we'll fund that loan, diverse source of capital. We may talk about that in a second, but that's majority institutionally backed, because lots of institutions sort of told us, well, wait a minute, your original model is great because you're delivering lots of great returns to lots of people. Actually, we can't get those returns. We would like that. And so we're back, and that's amazing, because we've basically had some of the biggest investment managers in the world crawling all over every bit of our business, right? And so the only person that's done more due diligence than them on me is my mother, who knows me for 44 years, right? So that's, they have backed our approach to lending, which is a massive validation. So we'll fund that project, and we'll work with you throughout, and that's the key thing. And it's an open contact policy. We'll drop by every now and again to say hi. We'll help you crack problems. You can genuinely ask us, well, what would you do in this instance? Well, most of those answers will start, well, when I was developing, I saw that problem and I did this. And if it's not that, we actually see that in the rest of our book, in these examples.
I don't really like the term power team, but I would say you're definitely part of the power team within the development. You're another. Like I said before, another expert that's on hand to provide support where required.
And I agree with that. So we do have this vision of, because in our experience, there was never a lender that you could actually say is part of your team, right? And that's genuinely how we think as a business, right? How do we be on the developer's team? And that's for an individual project and increasing the likelihood of success of that project, but it's also working with developers to help grow their businesses quicker. And ultimately, from the developer perspective, it's a lot easier to work with someone time and time again, because it's just more efficient. You know what it's all about, and therefore you can ultimately grow your business quicker.
Yeah, absolutely. And we've definitely seen that. Like we said. Okay, and so you touched on it there a little bit from an investor's point of view. Can you tell us some of the benefits for Crowdproperty from an investor point of view?
Yeah, sure. So I think the fundamentals are that we've got an amazing track record over many years of lending. We pick projects and developers well. So we're quite particular about that as well. But that's good all round, right? But fundamentally, we are picking great developers doing great projects, okay? And it's with that rigor, robustness, and to some extent grumpiness around our underwriting, picking and very, very carefully picking the right projects. That is why we built up a very, very strong track record over years. So never losing a penny of capital, never losing a penny of interest, okay? That then major institutional backers, and we have quite a number of them, working with us, actively lending through our platform and lending a lot of money through our platform to our credit policy. They're not looking at it, right? They've deployed that. We tell them where that capital's gone, right? And I guess that's the key. It's major players have done all the due diligence they possibly can on us and said we're a very, very good lending business, right? Now, part of our model also is that individuals can also invest through the platform. And they are effectively saying, I'd like to invest alongside these big global asset managers and back what we're doing as a team, as a very well-resourced team, in terms of supporting small and medium-sized developers. So it's the opportunity of being part of that, and you can do that through a standard account, which is subject to standard taxation, or you can do it through an ISA, where you get ISA, or Innovative Finance ISA, which has the ISA coverage on it, or through SAS pensions. Capital is at risk. It's secured first charge against the projects we back. But we have a very, very strong lending track record. So
you can do auto invest and sort of spread across different projects as well. Is that right?
Yes, exactly. So I haven't got the analysis to hand, but there's something like 90% of our capital is spread across 15 or more projects. That's good practice, right? Not everyone wants to dial in log on at 10 a.m. and participate in projects. You can set an auto invest up that just spreads across all the projects that we back. That is good practice in diversification, right? So that's all very, very possible through the platform, the lender side technology that we've built.
Yeah. And just looping back to the borrowers piece, so from an investor's point of view, you were talking about sort of not losing money, no capital loss, no interest loss. Obviously, there are scenarios in property development where where borrowers need an extension of time and they need further finance, and actually it's sometimes financial institutions not granting that then causes the project to be a failure because there's external forces, and actually just a little bit of extra time is what's needed. Can you talk to us about how you work with developers that whether there's something they need a bit longer to sell, or they need a bit longer to get planning and things like that?
So, we could talk about RBS in 2009, repossessing and fire selling everything very quickly, right? That is what not to do, right? That created a lot of problems. So, fundamentally, we have backed good developers on good projects that have good potential, right? Stuff goes wrong, it's how big it is and how you deal with it, right? And sometimes that will send projects late, and naturally that will happen against a property development book. It's how you work with the developer, and the fundamental principle is, apart from the rarest of cases, right, the best outcome is probably the project being finished by that developer. Okay, and usually it's a bit more time that's needed, right? There are lots of checks and balances on that. Are they still in the money? Has there been any issues with the planning, permission, or execution of that? And we have gone into receivership in a number of instances, like 3 or 4. Successfully recovered all of that, and actually work with those developers through that entire process. So that can happen, but we've backed hundreds of projects, so it's really in the rarest of cases. But fundamentally, that developer finishing that project is probably going to result in the best outcome all round.
And I think, as we were talking earlier about borrowers feeling like they can actually talk to you if there's an issue, you get the classic sort of head in the sand, which then makes the issue worse. Actually, what you want is the developers to be able to feel like they can talk to you, because usually the earlier you get on top of an issue, that you can stop it from becoming a huge thing.
Communication is everything. Right? It's between all parties is productive. Everyone understands that stuff goes wrong. Right, and we can all work together. The most effective way is to work together and get those issues cracked.
Awesome. So one of the first questions I'm sure people ask is, how much can you lend for a development project? So can you talk to us a little bit about that? I know there's a new sort of pre-planning product you've got as well, so maybe talk about the differences in those two.
Sure. So generally on a project, we will lend up to 70% of the purchase price, and then 100% of the works. Okay, it's important to understand that development finance, we're a development finance provider. It's not just for the works bit, but it's also the acquisition in the first place, because that gives us our first charge security. But so we support on both of those elements. Now, obviously there's a load of numbers that feed into calculating what's possible to lend. generally where there's a higher profit margin, we can lend more, and that often ends up at 70% and 100% of works. Okay, so I mean, very, very rough ballpark. If you're buying something for 100 grand, you spend 100 grand and it's worth 300 grand at the end, right? We can lend 170 against your costs of 200, okay? And then that helps you get realize the 300 GDV. That requirement generally is, with planning permission in place. So we will actually help you as well structure the right deal on the acquisition, whether that's exchange delay completion or option agreement or exclusivity agreement or whatever, to help you gain planning permission where it may not be in place during the sort of either de-risked element of an agreement with a vendor, or structure a JV contract with that vendor, or with a new planning gain finance product that we introduce. You can actually take greater risk on the acquisition. We can fund some of that acquisition. We can risk mitigate it in various ways. You can put insurance products behind it, but also we have an in-house town planner, just part of a good example of the sort of deep expertise that we're building across the team that helps assess those sort of planning gain opportunities. Fundamentally, we look at it as if, we're looking to mitigate our risk, but we also are keeping an eye out for the developer, right? In some cases, we might say, no, don't acquire that now. Let us help you get the agreement with the vendor, the lockout, the exclusivity, the whatever. How do we do that? Lots of different ways. We're happy to pick up the phone to vendors. We will put proof of backing, to show that you're well progressed. You are in a good place to have a lockout agreement with. So there's lots of different dimensions, but fundamentally, we get property and how to structure property deals, and that really helps in every angle of a developer's journey.
Amazing. Well, thanks so much for your time, Mike. It's always inspiring to come up and see, to meet you and to meet the rest of the team and see the growth that's happening. And like I said, from our point of view, I like to say it's a badge of honour that we're one of the top 5 borrowers, I think, and hopefully that's still true. And we'd only do it if it was easy to use, cost effective. You do what you say you're going to do. You support us, and all of those things. So thanks for taking the time, and thanks for Crowdproperty. It's a great platform.
Always a pleasure. Thank you.
So a massive thank you to Mike Bristow, the CEO of Crowdproperty, for answering some of those questions. If you've got any questions or comments, drop them in the comments box below. As I said, from our experience, working with Crowdproperty has been amazing, both on the borrower side and on the lender side. So definitely check it out if you're looking to fund a development project, and also if you're an investor looking for, share of first charge returns. Check out the Crowdproperty website as well. So thanks for watching, and see you next week.